Hi, folks. Bill Bodner here, Mortgage Market Guide. Thanks for tuning in to our MMG weekly recap. So up on the screen on a Thursday, you can see some nice green. Mortgage-backed securities moving higher. You can see the red over here. The 10-year note is moving lower, 130 on the 10-year note. And this week it was all about the Fed and inflation. So we had inflation numbers come out. They were hot. PPI number, the wholesale inflation came in hot. That was going to make the Fed semi-annual testimony in front of Congress very tense, right? Because now they have to defend the bond buying program. Well, the Fed got out in front of it, sent out released their statement, and essentially said, now is not the time. We're far away from where we need to be on the employment part of the Fed's mandate. And we're going to talk about tapering over the next couple of meetings, but it's not happening now. And so if you could read the tea leaves, that tells us that nothing's going to happen during the summer. And that's why bonds, in our opinion, are moving nicely to the upside. In addition to, I think there's some weak economic prints. I think the labor market continues to move sluggishly back to full employment. And so that's giving a lift to the bond market. So it's just a wonderful backdrop as we head into the weekend. And lastly, lumber. Lumber was $1,700 for 1,000 square board feet. It's now under 500 at 490 right now. So just remarkable. Now, next week, the big news is going to be these corporate earnings. And we're watching inflation to see if it's the high inflation that we're seeing, is it going to be transitory? And when we get these corporate earnings and for these public companies, some of the questions that are being asked are, hey, you're getting high costs. Are you able to pass them on to your consumers? And if they have the pricing power to do so, that could create some inflation. So there's a lot to follow. But right now, it's all about the Fed. And it appears very clear that they're going nowhere right now. The Fed punch bowl is fully intact. And that's why bonds are having a nice time heading into the weekend. Hope this finds you well. Have a terrific weekend. Be back at it soon.